Okay, welcome back. The market, which is down 60 points, it's off the lows by about 20 points or so. We'd slipped by about 80 points, and we're down 60 now, 17,391. So that impulse to try and test the waters, see if there is some buying interest, which will be supported, is there. And you can see that on the price action on the screen that we are tracking. Market breadth has also slipped. I mean, the gap is not very clear, 2:1. It slipped a little bit, but still in favor of advances by a significant degree. Now, health insurance is in focus. Star Health and Allied Insurance is the next company we are speaking with. CLSA has upgraded the stock to a buy. The main reason they're citing is the big price increase that Star Health has taken for a large portion of its portfolio. Mr. V. Jagannathan is chairman at Star Health and Allied Insurance. He's joining us now to take some questions. Mr. Jagannathan, good to have you with us here. Thank you very much for your time. It's not just you, sir, right? Across the board, health insurers have effected large price increases, anything between 18 and 25%. Could you, two things. One, could you tell us, this is, for you, what is the price increase? For what percentage of the portfolio this comes into effect? What is the change in earnings because of this, say for F5 for this quarter and for F5 24? And two, if you can explain the rationale for these steep price increases, because lots of viewers who are holding these policies, who are renewing these policies, have also written in asking us to quiz what is the reason for very sharp price increases. Go on, sir.
Thank you very much for giving me this opportunity. You raised a very interesting and informative question. See, we have taken steep increase on two of our products. One product earlier, now in one other product called Family Health Optima. Usually the price increase is taken when the claims ratio is up and is not sustainable. Now, you must know every year there is a medical inflation, and which is at least minimum 10 to 12%. Apart from that, various other factors also come into play. Let us say the incidence of claims going up, with the result you have to pay more.
Nathan, sorry, just to come in, but isn't it steep? Sudden 25% increase, very steep. The factors are all very well understood. The only question is it cumulative price increase that had been pending, which you've taken in one go, and not just you, right, but across health insurers?
You hit at the nail. Actually, the IRDA has given us approval to raise 5% during pandemic time, which we have not done. Why we have not done? We have not done because as it is, our clients were suffering. It would be like rubbing the salt on the raw wound. So I said no.
So 5% was the approval, and then, but this is a larger increase, right? Yeah.
Yeah, no. Across the board, they gave us permission, which we have not done it. But after everything is settled down, we have taken that into account, and also the medical inflation. And you must know, every day there is a change in the method of treatment. If you go back in the history, you only an X-ray, then came MRI. Now the ultrascan, the price, and you cannot tell the
Mr. Jagannathan, no, got it. Has there been any drop-offs? Do you usually, when you see a significant price increase, I mean, do people switch policies? I mean, or no, it doesn't happen, because this is a substantial and across the board. Go on.
No, there is not a drop. There is no drop-off. I can confidently tell you, because our clients have got so much faith in us. Apart from that, the other facilities, such as the number of hospitals we have enlisted, the agent service, the sales manager service, and the grievance mechanism we have set in, they are comfortable with us, and they know, they understand us. They are with us for such a long time. Don't forget, we are the first health insurance company. So they have not dropped out. At the most, there are few cases where from one policy to another policy, they have migrated.
Sure. Sir, I also want to ask you a little bit, first of all, good morning and thanks for being with us on the show. A little bit about how the next couple of years could shape up. Earlier, you had guided for a growth of 20% over the next 2 to 3 years and a combined ratio guidance of 95 to 96% for FY23. Tell us a little bit about whether you hold on to this growth guidance and what do you see the next 1 year shaping up as in terms of what could be the growth triggers, what could the growth itself look like in FY24?
FY24, we will be maintaining almost 16 to 17%. That is what we anticipate. And the growth will only be an upward, and the profit also is expected to go towards the northern side rather than climbing down to southern side.
So 16 to 17% is the growth that you're looking at in FY24. Got that?
I said minimum.
Minimum 16. Okay, so minimum 16 to 17%. So it could perhaps get better than that as well. And in terms of a combined ratio guidance, what would it stand at for FY24?
My own feeling is it should come further down because we have done about 96% up to third quarter. Fourth quarter itself, there could be a drop. And in the coming quarters, automatically there will be a drop because, see, one thing is we have taken up this price increase, which will also have a telltale effect to some extent. And the hospitals, I should say that they have become more cooperative and they are dealing with us for years. And they know when we discuss with them, they find it that we are very reasonable. And you should know that we have got more than 450 to 500 doctors on board to discuss with them to arrive at the fair pricing for our client. Ultimately, don't forget one thing. Whatsoever we charge from the client, it goes into a pool. And from the pool, we pay. So we are also very careful while maintaining the pool so that, by the indirect way, we need to increase the premium.
Okay. All right. Well, sir, thanks so much for stopping by and giving us your insights into the company, the way ahead, as well as the industry outlook. We look forward to chatting up with you in the coming months as well. For the time being, let's move on. Let's focus on a stock that was buzzing. Carousel India, it was up more than 10% yesterday. Quarter 3, remember, was weak. It was impacted by exports. But to understand how is quarter 4 shaping up and the way ahead, we're joined by Mr. Chirag Parekh, the CMD of the company. Hi, Chirag. Good morning. Thanks so much for joining in. Well, the stock has been buzzing, so clearly the street is a little bit optimistic on recovery in quarter 4. Earlier, you had guided for around 650 to 700 crores of revenues for FY23. As of 9 months, you have done close to around 450 crores. So is 200 crores, going to happen in quarter 4, or do you want to revise down your guidance? And what about margins? You hold on to that 18 to 20% band?
Thanks, Nigel, for having on the show. I think, during the last, my call, the investor call after the quarter 3 results, the results has not come out as bad as what we had thought. I think the quarter 3 shaped up quite well. I think we were almost in par with quarter 2. And also I gave some outlook of the business is that the US market is improving. We almost got back to the pre-COVID levels of order booking in UK, US, India. So I think the outlook looks very optimistic. While there are still challenging times which we'll face, especially in the sector, but I think the fundamentals of the business remain still very strong.
That's right. Chirag, you have mentioned that this is an underpenetrated market. It's good to hear that at least the global trend is improving, as you're mentioning. You'll end this year, though, at 650 to 700 crores, or do you want to revise that downwards? And margin outlook as well. 2 key numbers.
Yeah, so I think we still were very bullish on the quarter 4. We may not be able to hit the numbers what we had earlier planned, but I think the good thing is the company is getting back on track. Our pre-COVID levels order booking is coming back to the normal level. So yeah, so we are very optimistic for the year 23-24.
Okay, I'm sure you're very optimistic, Chirag. I must tell you, as a consumer of kitchen sinks, I've spent a lot of time when I was doing up my house, into the multiple avenues, kitchen sinks, cooktops and all of that. I'm sure demand has come back because people must have not spent money on all of this for the last 2 years. But tell us, you had a target of a long-term revenue target of around 1,000 crores. Do you stick with that? And what could the triggers be? I understand that you're supplying to IKEA as well, and you've doubled down your supply there. Sales of Grow Hair are increasing. What could the triggers be to achieve this 1,000 crore revenue? What is the growth strategy? Any new clients that you've got on board?
No, sure. I think you mentioned the correct point is because people who are after post-pandemic were traveling now lately. The 6 months has been revenge travel to yes, so they didn't have time to buy kitchen, but that's coming back now. People are coming back to their homes, and now you see that people are spending more in the kitchen. So I think that's number one. Number two is that I also mentioned that there has been a lot of crisis which we hear in the European side, and 90% of our competitions come from the Germany and Italy. So I think we are seeing a lot of opportunities. We are seeing the wind blowing to our side. There's a bunch of opportunities which we are talking about it now. And so hence we see that the Carousel is going to be, I think, bundled up with opportunities. Our long-term target of 1,000 crores, I think, still remains intact, and we are very confident we're going to achieve that.
Okay, so confident to achieve the long-term target. Any timeline that you're looking at?
I think, this year, I think we're expecting about 20% growth. I think we should be closing around 600 crores, 585 to anywhere between to 600. I think next year, I think we are looking at a good positive outlook on this. I think if that goes as per the target, we're looking at a 25-30% growth next year and the year after. So I think in all probabilities in the next 2 years' time, we should be able to achieve the 1,000 crore target.
Okay, so by 2025, you should be at around that 1,000 crore target. For this year, you're going to be ending closer to around 600 crores. And on that base, you're looking at a 25% growth. We've got those numbers correct, right, Chirag?
Yes.
Okay. What about the margin outlook? 18 to 20%, you maintain that?
Margin outlook, we are once again confident we're going to maintain that because the input cost, energy cost, freight cost has just gone, they have come back to the pre-COVID levels.
Okay. So 18 to 20% is what you're holding on to. Chirag, you had this expansion plan at the start of this fiscal, which you pulled back for 200,000 units odd. Are you looking at restarting that particular, expansion plan? Because it was on pause mode, I understand. What's the latest out there?
Yeah, I think we had to put it on hold because the geopolitical situation in Europe and where the global inflation was going to, we had to literally check ourselves. And so I think we are watching it carefully quarter on quarter. Opportunities are going to rise, like I said, and we are just hoping to restart our expansion once we see that the whole inflation, global inflation is under control, and I'm sure that the housing and everything is going to get back on track. But till then, we're going to focus our efforts on expansion of the stainless steel sinks, which we have opportunities. We have with the major customers, tie-ups with IKEA, Brewer, UK, and now we do with the US. So we see a good volume expansion in the stainless steel category, and we are looking into diversification of manufacturing built-in appliances and kitchen faucets.
So you have this, you've made this acquisition of Tickford Orange as well, right? Tell us a little bit about it because I understand it has over 35% market share in UK. What kind of growth are you looking at over there? 30 to 35 crores per quarter is what you've done in terms of current revenue run rate. How much can you grow it by?
I think it was a very strategic acquisition, and it was, and I think the UK piece is playing out very well. We have been able to beat our budgets in the current year, both from the surfaces side and from the sink side. Is purely there were a lot of cross-selling opportunities. So I think we'll be doing better quarter on quarter with the Tickford, and now it is called Carousel Surfaces now. So I think we expect to do better on quarter
Okay.
because we see improvement in the order booking.
Got it. All right, Chirag, thanks so much for stopping by and giving us all those details. So now it's going to be around 600 crores for this year, margins of around 18 to 20%, but optimistic that you'll grow at a clip of around 25% for the next few years. Well, getting back to the markets, though, we're at the low point of the day. So Mitesh Thakkar is with us. Mitesh, call on the index and any fresh calls?
Imagine looking at 17,350, 340 as a support zone. I think this is where if somebody wants to buy, the best stop loss is of 20 points. And on the stock side, I have a buy on Colgate with a stop at 1480 for targets of roughly around 1530. And AB Capital is the other one, which I would recommend as a buy with a stop at 149 for targets of 160.
Right, thanks a lot for that. Let's slip into a quick break. On the other side, Manisha Gupta will join in. She'll put her focus on the commodity market. Stay tuned. Welcome back. As promised, we have Manisha Gupta joining in now to give us a quick word on what's happening in the world of commodities. Manisha, what are you tracking this morning?
Thank you for that. Sonia, I'm looking at the crude oil prices because this week is clearly on the positive side. And after 4 months of decline, we've started March on a positive note when it comes to the crude oil prices. So trading around and above that $84 per barrel. And we are looking at strong PMI data continue to support the markets today itself. China also is the largest consumer, and we are looking at markets anticipating that we will be looking at record China imports in 2023. The data for the month of Feb has been stronger, and the kind of loading instructions that have come in for March also seem on the positive side. Add to that, Russia also is cutting oil exports from Western ports by nearly 25% in the month of March, and that is adding some premium to prices also. Markets also are looking at the US crude output, which has seen a decline, while the exports have hit a record high of 5.6 million barrels in the previous week itself. So that continues to add to the positiveness in the markets also. When you look at the US crude inventories, though, they have gained for a 10th straight week at 1.17 million barrels. So that stands at a total of around 60 million barrels now, of an addition to US inventories in the year 2023. So for the first 2 months, have seen a lot of crude inventories gain in. That is because the refinery runs have been slightly on the weaker side there. Take a look at the OPEC output, and we have seen those numbers continue to decline as well. So where we were in the month of September at 29.7 million barrels per day, we have seen that number continue to decline. So Jan was 28.8, and we are looking at Feb at 28.97, with the markets anticipating that you could be looking at a lower number when we head into the month of March there. Take a look at the crude oil prices itself, and while we started January on a positive note there, Feb was kind of lackluster, flat even. March, the first 2 days itself have seen 2% of gains come in, with the street anticipating that as we head quarter on quarter on the higher side, you will be looking at higher demand and higher prices.
Okay, thanks a lot for that. Let's get back to some buzzing stocks now. Abhishek is here to tell us about Bajaj Finserv. Abhishek, over to you.
Well, Sonia, they have got, SEBI license to commence mutual fund business. So the company has said that they will look to come up soon with a range of mutual fund products, including equity, debt and hybrid funds, both in the active as well as passive segments to investors. So a whole range of, product bouquet on offering by Bajaj Finserv. So Bajaj Finserv Asset Management Limited will be the mutual fund business that will be coming in, and Ganesh Mohan, who is currently the group head for corporate strategy, will lead the company or the AMC business as its CEO. And for CIO, that is Chief Investment Officer, Nimesh Chandan has been appointed. Back to you.
Right, thanks a lot for that. The other stock that we're looking at this morning is Olectra Green Tech. Now, it's had a dream run in the last few days. In fact, from the 52-week low of of around 400 or so, the stock is now at 530. So it's about a 50% recovery from the 52-week low, and it's had a very good run in the last many days. Now, the company has received an approval for e-tippers, which are the tipper trucks, but electric vehicle tipper trucks. And they've received their first order for 20 e-tippers. That's in the final stage of discussion. So there's, revenues coming in, expected revenues coming in from that. The recent other positive news flow was that they've announced the development of a hydrogen bus with Reliance. That happens in a year's time. So their e-buses segment has been doing very well. In fact, in the 9 months of this year, the revenues in the e-bus division has risen 174% on a year-on-year basis at 699 odd crores. So the financials are looking good, the orders are piling up, and hence the stock has seen a big gain in the last couple of days. In fact, even today, it's up almost about 8 odd %. Let's slip into a quick break. On the other side of the break, in our special segment, it's the economy. We will put focus on the Mumbai real estate market. Lata will get chatting with Niranjan Hiranandani of the Hiranandani Group, Gulam Zia of Knight Frank and Abhinav Joshi of CBRE. Stay tuned.